Welcome back to the Halftime Report. Big bullish call today on Chevron. Goldman Sachs adding it to its conviction buy list, saying the underperformance creates a compelling entry point. It's our call of the day. Steph, it is your biggest energy position.
It is. And I barbell energy. Transocean has a lot of beta, and I've been adding to that one most recently because I have more confidence in terms of where energy prices are going. It's more levered to the oil price. But Chevron is just a really great quality company, good management team, great assets in the Permian and in Australia, and it's lagged the group by 6% year to date, and it has an 8% free cash flow, and it yields at 3.5%. So, which is very safe at this point. So I like it. I agree with the call. I don't know why it's lagged exactly.
Yeah, it's not like it tracks the move in oil so directly.
No,
I mean, WTI's up nearly 50% over a year. Chevron's up 6%.
Yeah, I mean,
Exxon's up 5%.
It's a defensive way to have energy exposure, and that's actually why I have that barbell approach in energy, because if I owned all of this Transocean and even Schlumberger, which I do, they have a lot of beta, and that really is, every day it's kind of takes your... It's a distraction, if you will. But, I mean, Chevron is just a quality blue-chip name that is lagged, and I think the valuation makes a lot of sense.
12-month target, they go, Joe, 142.
They do. They also take ConocoPhillips from a buy back to a neutral. I don't know if I agree with that. I think ConocoPhillips right now is in a sweet spot. There is a lot of positive momentum, both technically and fundamentally. I think that continues to move higher. So I don't know necessarily if the play is you're going to take some of the strong gains and success you've had in ConocoPhillips and you're going to put that into Chevron. I agree with you. There's an opportunity here for Chevron to clearly show the marketplace the assets they have in the Permian Basin in Australia. But I also like ConocoPhillips. I'm surprised ExxonMobil was not mentioned this.
Which of these trades the most with the price of oil? Like, let's say you think 85 is or 90 is where we're headed. You could make a case that some of these are dividend plays.
Chevron, I can tell you that by virtue of the stats.
Of those three, Conoco has the more leverage. But you're
Conoco's
going to want to own oil service. You're going to want to own deep water.
Well, if you want the real leverage on that.
You want Marathon, Hess, all those.
They do trade with the price of oil, but with a significant lag because these projects that they go into are long. They're many years, and it takes a while for the cash flows to show up.
I mean,
and they have hedges.
Right.
And
but look, I look at 4 of these together.
Crude
Chevron.
is up. Pardon me.
Go ahead.
For interrupting you. Crude is up 48% over a year. Chevron's up 6%. Exxon's up 5%. I mean, how significant of a lag are you talking about? 20 years?
Royal Dutch, look, Royal Dutch is a little bit more than that. That's the one I like a little bit more than Chevron Texaco. Okay, now look, when I put all 4 of these together, Royal Dutch, BP, Exxon, and Chevron, not ready to put Conoco in there together. When you trade these, when you decide you want to enter a position, I feel that this is a case where valuation does matter. You do have to make a call on oil, but the valuation does matter. The reason I chose Royal Dutch over Chevron is it has a meaningfully higher yield, slightly lower price to book value, about the same price to earnings multiple. In the long run, that will matter. This is a case where valuation does matter.
I almost go back to the same question I would ask, when the auto stocks were lagging. If you can't have a good auto stock
but Royal Dutch is doing good.
Auto,
Royal Dutch is doing good.
Okay, but you can't have Exxon or Chevron do well in a great environment for oil prices. What are you waiting for?
Scott, you have to know what these stocks are designed to do. It's not just price appreciation. The yield matters a lot here. And to Steph's point, I want to make it very clear. These are not the highest beta to oil plays. You get a Transocean where you have to have a lot of courage to do it, okay? That's where you're going to get your beta to oil. These are slower beta. The yield matters a lot. You can't just look at the price action.